the tax advantage. And you obviously brought up a 1031, but I'd love to hear a little bit about kind of your thoughts. You know, we know about kind of the potential to offset annual losses, which really don't translate to actual investor losses, but let's talk a little bit about that. Tom, I think you'd be
look, I'm
gonna offer some great insight here.
And I'll let Zuber fill in too, but just yesterday I had a conversation with two investors, and I'm always helping them. One, I want to understand their situation. You know, does their partner work? Do they not work? Where they're at in their journey. And again, one thing people don't consider enough is the beauty of our tax system, right? Real estate was, Kiyosaki has the cash flow quadrant, and he shows that in that quadrant, investors and business owners are incentivized from a tax standpoint by W-2 earners and the sole proprietors, right? What that means is you get tax breaks, beautiful tax breaks if you own real estate. One of them is depreciation, and I'll let Zuber kind of hit on that as to how that's helped him in his apartment holdings. But it's absolutely a metric that any savvy investor has to consider quarter to quarter, year to year, and I'll stop there. So
what I would say about depreciation, I would actually go back to what kind of Tom brought up, our tax system. If you ever needed incentive to understand real estate, know the fact that Congress collectively owns a lot of real estate. And why do I bring that up? Well, people are people. And yes, our Congress folks, even though they're giving and self, blah, 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 they're going to do things that help them and their families. Lo and behold, the Trump Tax Act or Jobs Act or whatever it's called had this wonderful thing called bonus depreciation. And there's this, thing that's been used a lot of times by the big guys, cost segregation, that has now been brought to the little guys. So I know of several real estate professionals, and now that you have to do work to qualify for that, who have 7-figure years that will be writing off everything because of cost segregation and bonus depreciation. Go ahead and look those up. It's a wonderful tax system.
And Zuber too, similar to a company, something called carry forward loss.
Exactly.
Right? If you have leftover depreciation, you can take it to the next year to help write off those gains. So again, it's just a wonderful asset when it comes to tax strategy. And so when I'm talking to my investors, it's like, look, what's your tax planning strategy? If you don't have one, get that first. I mean, geez.
And talk to an expert. Tom, you had somebody great, I think, was it Brent Hall?
Brandon Hall, yeah, he's the real estate CPA. Happy to make the introduction if you give us an email. Yeah, he does work with higher net worth individuals, just being transparent.
And so find somebody in your local market that you might have an opportunity there. I think that could be a great idea.
Any CPA knows about bonus depreciation. I mean, it's so obvious nowadays. But yeah, I mean, it takes an hour of your time to talk about this. I mean, geez.
So phenomenal advantages. We talked about the ability to offer absolute returns, the hedge against inflation, the diversification among stocks and bonds. Although I do think folks do need to own some stocks and bonds. Absolutely. The benefit of those monthly cash flows. Where else are you getting yield today? It's not coming from your fixed income investments. It's next to nothing, probably not keeping up with the rate of inflation at all. If you think about it, and it's probably a losing asset. You think it's a safe asset, but the reality is you're probably not making much. You're actually losing money, losing purchasing power, I should say. And then the potential tax advantages. But let's talk about some of the challenges of real estate. Heterogeneity. I don't know if I said that right, but that's my best stab at it. Okay. And ultimately what that means is not all of the real estate investments are the same, right? Every single real estate investment is different. So you could, Zuber, you've done a really good job. You've got your spreadsheet there that you've been using since day one, and you can apply it to each individual real estate investment. But the reality is these are all different deals.
Oh, no, without question. Every line is a different deal. And again, it takes time, folks. This is not, I've looked at my market every day for 21 years now. And it probably took 6 months because I never even lived in my market, never spent the night in my market, right? It takes time to learn this stuff. Every asset stands alone. Every asset is compared to the others. Expense structure, rent, value add, areas, easy to turn over. I mean, every deal is different. I hate rules of thumb. Rules of thumb don't work in real estate. Like, for example, my best asset over the last 21 years has been shockingly 512 square foot single family home on a quarter acre lot. It was built in the 1920s. Same person's lived there. I think I've had one maintenance call in 18 years. Never moved, never a problem, never missed a payment. Without question, the best asset I've owned is a 512 square foot single family home.
It sounds like the Toyota Camry of real estate.
Believe me, if I only had one thing to buy, I'd buy all the little houses in my market I could. But thankfully, I could buy anything I want.
Brilliant. One of the other disadvantages, I think, is what's referred to as lumpiness. And, you know, when you go out and purchase any traded asset, like a stock or a bond or even crypto, whatever amount of money that you've got in the bank or liquid, you can go out and actually buy that asset. If I've got $100, I can buy $100 worth of a stock. It's not going to be much, but I can do that. I can't really do that in real estate. And so you do need to have a specific set amount, allocated amount to go out and purchase the asset that you want to purchase.
Yeah, I mean, we'll even go one step further. A lot of people in the real estate game will poo-poo that, right? Because I technically have done zero down deals and all of that. So you can build your network, you can find these corner cases, and markets are different. That said, if you don't have an emergency fund set aside for real estate, you're going to go broke because bad stuff happens. Mother Nature is a pain. People break stuff. If you don't have an emergency fund, which is like real money set aside, you're going to lose your assets eventually. But no, I agree with you. The problem with the real estate is it takes cash to get started. Sure, when you're in the game long enough and you got a network and a reputation, you could do zero down deals. But people that pitch that strategy are being disingenuous. I could not have done a zero down deal probably for the first 8 or 9 years. Have I done them? Absolutely. I bought an apartment zero down. That's not something you're going to do as a rookie investor. And to sell that vision is to be disingenuous. So I agree with you. It takes some scratch, but that's part of the game, right? You got to sacrifice, live below your means. If you want to make work optional in 10 years, it's going to take work. It's your call.
Yep.
Yeah, I think those are great points that you made, Zuber. We talked about this before, and this is the most important consideration in investing in real estate, and the disadvantages is the liquidity. And obviously they are liquid. It's just not a daily instant liquidity as a publicly traded instrument. And so, you know, you want to put a house or an asset on the market, you know, it's going to take some time to find a buyer, although not much these days. I think I had an offer in 3 days. And then ultimately you're going to go through the inspection and the option periods of these different assets. And obviously the bigger the asset class, you talked about apartment buildings, you know, that option period now looks like a 60 or 90 days. And Tom, you look at some of the land developments that those deals that you look at, they're much longer. And so it's not as easy as just, you know, getting on your app and selling your investment. Although for the right price, I'm sure you could probably get daily liquidity. If I dropped an asset far enough, I'm sure somebody would come along and pay cash, and I'd have the money in my pocket tomorrow, and I probably just wouldn't command market value.
Yeah. Well, this is actually a very important one because you need to know yourself. So myself, right? I almost called myself Zuber in the third person. Boy, that was going to be weird. But so back to my stock trading days where I turned 7 into 200, then 200 into 40, right? That whole cycle. What did I learn about myself? I am an emotional investor. I don't have systems and processes. I'm emotion based. And that means I do dumb stuff. I was going to use a different word, but I do dumb stuff. So I've come to real estate and it is not as liquid. So I have had moments. I remember one triplex that comes to mind, like 2016 to 18. We had 7 turnovers in a triplex. That's not good. Just some unlucky things and this, that, the other. If I would have had the same liquidity, I would have sold that thing and I would have lost $100,000.
Yeah.
We kept it because I had to. I couldn't sell it. I didn't do this. I did. So I love the fact it's illiquid for me as a personal investor. I'm emotion based. I know who I am. And the fact that real estate is illiquid is awesome for me.